Hey there, and congratulations! You decided to buy a house! That is awesome. And it's kind of scary too, I know, especially that whole down payment thing. It's really one of the biggest hurdles to buying a home, right? Saving up this monstrous down payment. Like what? Where do you even start? So many questions, I know. Well, not to worry, because I'm about to share with you everything you need to know about down payments, but we're afraid to ask. Let's start off with the basics, shall we? What is a down payment exactly? Well, it is the upfront money that you're putting towards the purchase of a home. Most people, when they're buying a home, especially their first home, get a mortgage, a loan from the bank. Here's the thing. The bank, they don't like to loan you 100% of the money. They don't. They want you to have a little skin in the game. So that's the down payment. It's some cash that you're putting into the pot when you buy the house. Well, how much do you really need? Like, how much is this down payment? Great question, to which there are many answers. Out on the street, you're going to hear 20% down. A lot of people are going to say it's 20% down. Put 20% down. And if you can put 20% down, you should. It's great because you don't have to pay mortgage insurance. Mortgage insurance, what's mortgage insurance? Good question. Mortgage insurance or private mortgage insurance, PMI, you might hear that terminology, is a premium the bank is going to charge you if you put less than 20% down because, let's be honest, they're afraid you might not make your payments. It happens sometimes. I'm not saying that you're going to do that, no. But the bank doesn't care. They're just going to charge it because they're paranoid about this kind of thing, and who can blame them? So you're going to be making this mortgage insurance premium if you put less than 20% down. Now let's talk about some of the lower down payments, and we're going to circle back to the PMI thing. You don't have to put 20% down. You can put less down. If you're getting an FHA loan, which is an excellent loan program for first-time buyers, a lot of times it has a very attractive interest rate. It's a little easier to qualify, and you only have to put down 3.5%. Yeah, that's way better than 20, right? The other option that most people go with when we're buying a home is a conventional loan. And it's a little harder to get qualified. They're a little stricter. And for most cases, you have to put down 5%. Now, on a good day, when all the stars align, you might be able to put down 3%, but plan on 5%. A big difference between those two loan programs, as far as, there's lots of differences, but as far as the mortgage insurance goes, with the conventional loan, let's say you put your 5% down, and then either through a combination of paying off your loan as you're making your monthly payments, a little bit of principal goes off every month, and the value of your home going up, you build up equity in your home. So you start off at 5%, but maybe in 2-3 years, around Phoenix, property values go up pretty fast. You will find yourself with 20% equity in your home. It's really more like a 22% equity that they like to see, but once you reach that threshold, your bank's like, cool, no more mortgage insurance. Now that's for a conventional loan. For an FHA loan, no. They're like, no, you're going to have to keep making that mortgage insurance premium like as long as you have this loan. So if you don't want to pay it anymore, if you do reach a threshold of 20%, you have to refinance. You have to get a new loan. Otherwise, you're going to keep paying that mortgage insurance premium. How much is the premium? $200 a month, something like that. It just depends. It depends on the loan amount. If you put more down, like instead of 5%, you put 10% in, there's less. So it's a formula that you're going to want to talk to your lender about, but just be aware that that's something out there. All right. So how am I supposed to get this 3.5%, 5%? What am I supposed to do here? Like I am shaking out the couch cushions and I am not even close. What am I supposed to do? Well, there's a couple things you can check out, okay? You've heard down payment assistance program. It's real. It's a real thing. Yeah, there's people that will give you money towards your down payment. They will. You don't even have to pay it back. Okay, there's some rules. First of all, there's usually an income cap. You have to make below a certain amount, which, a lot of first-time buyers, that's why they don't have the down payment. And there's some other rules too. You have to take a class, and you have to have a certain credit score. Once you get qualified, then you can get like 3% towards your down payment that you don't have to pay back. It's a grant. Now, many times there's a rule or some sort of, conditions, like if you were to refinance or sell your home in less than, let's just say 3 years, there's different rules for every program, then you might have to pay a portion of it back. There's all kinds of rules, all kinds of programs. So this is one that you're going to definitely want to talk to your lender about if you're interested. Oh, too good to be true, you say? Well, not really, but there are some downsides. First of all, you're going to be paying a higher interest rate. And a lot of times it's significantly higher. Second, these programs, they run out of money. So the programs are not always available. And even if they are, like, let's just say you go to your lender and they're like, you qualify, like, here you go. That by the time you get around to buying the house, that money might be gone. So that would be a very big risk. So there are some things to consider. It's not like so easy to do. There's some really excellent down payment assistance programs, though, that you might not have heard of. Well, I'm sure this one you have, but the VA loan is the best. 0 down, no mortgage insurance. It is like our gift to you who have served the country. And if you qualify for it, you should definitely look into it because it is an excellent program. There's also a program called the USDA loan that doesn't apply to every home. It's more like an outskirts, kind of out in the sticks kind of home that would qualify for this loan program. Kind of like there's no Fry's or Costco nearby, that kind of house. But those kind of homes, you can sometimes get a loan with 0 down. You can, but it's another one that runs out of money. And again, not every house qualifies. In fact, most of them don't in a metropolitan area. But if you're looking for a house in like Coolidge, maybe. So something to look into. You can also get a gift if you have rich relatives, somebody who's really wants to see you get a house, a rich uncle or your parents or a really super good friend. They can gift you the money. They just have to sign something that says, yeah, it's a gift. They don't have to pay it back. They can gift you the down payment money. You can do that as well. Do some crowdfunding or something. Well, I'm joking. Don't do crowdfunding, okay? Your lender will be super upset with you if you show up with crowdfunding money for your down payment. Lenders are really picky about where the money comes from, but you can get a gift. It is possible. There's one other strategy that I often recommend to people who are just starting out. If the down payment assistance programs aren't really playing out and you don't have a rich uncle, here's another way to go. Because here's the thing. Not only do you need your down payment money, but you need closing costs. What closing costs? I know. They forgot to tell you that, okay? Closing costs are your fees that you pay your lender. Sometimes it's fees, points, appraisal costs, title insurance, escrow fees. They add up, okay? They add up. And it usually ends up about 2 to 3% of the purchase price. So that's extra money that you have to, I'm sorry, it's just the way it is. But here's the thing. In certain markets where sellers don't have the upper hand as much as they did, when people are lined up around the block, we're not going to be able to do this. When there's multiple offers and bidding wars, we can't do this. But in normal market conditions, when homes are taking a little longer to sell, sometimes we can go and negotiate with the seller to offer seller concessions. And that means they're going to chip in some money. They're going to credit you this money at closing to go towards your closing costs. Yeah, they'll do it because they're still netting the amount of money they need to sell the house. They get the house sold and they're helping you out. It's a win-win for everybody. The seller cannot credit you down payment money. They can't do that, but they can contribute towards your closing costs. Now, let's just say you have your closing costs money too. Sometimes we can negotiate for the seller to kick in and you can use that extra money to buy down your rate. The rates are kind of high right now. So if you give your lender a few extra bucks, some points, they can give you a lower rate. So there we can talk about that in another video. There's a lot of tricks there, but it's just something to think about if you're short on cash and you're trying to get into that house. All right. And now I know you know how to save money, okay? But I know it's hard too. I'm not trying to discount the difficulty in saving thousands of dollars. But you would be surprised if you just really commit to it. Set aside a separate account, a separate savings account or bank account. We're going to put every extra dollar that you can find. Not just couch cushion money, but hey, stop going to Starbucks. Get a Mr. Coffee. Start eating peanut butter sandwiches at home instead of going out to eat every day. Maybe think about setting up an automatic savings in your checking account. Every week, $50 goes into your saving account or something like that. Move in with mom and dad. I know that's extreme. Have a strategy to save the money and make sure you're putting that money somewhere where you can't touch it. I don't know about you. I don't have that kind of willpower. If it's just sitting there and you're like, oh, it's just a little bit, it's going to make it a lot harder to get there. And the quicker you get your down payment, the quicker you can get a house. And honestly, the less money you'll probably end up spending because house prices, they just keep going up. They just do. Really tighten your belt, really tie the shoelaces or whatever those cliches are for saving money. Just put a focused effort into saving the money, and you'll be surprised at how quickly you can do it. Just commit to it. Make a schedule. Say, I can save this much every week or every month, and it will take me this long to save this money. Do it. Just commit to it, because it's going to pay off in the end if you can buy a house. So that's pretty much it. Everything you need to know about down payments. In a nutshell, let's just recap. So 20% down is awesome. You don't have to pay mortgage insurance. It cuts down on that monthly payment for you. But if you don't have 20%, it's okay. You can still get in with 5% on a conventional loan, 3.5% on an FHA loan. If you're a veteran, you can go in 0 down on a VA loan. And if you're buying out in the sticks, you might be able to get a USDA loan for 0 down. There are some down payment assistance programs available, but they can be expensive and sometimes hard to find because they run out of money. We can ask the seller maybe to kick in for closing costs. Sometimes they're willing to contribute. And you know what? Just make a plan and start saving up that down payment. I know it's no fun to save money, but it's a good financial decision. And down the road, you're going to be thanking yourself that you did it when you're holding the keys to your new house. If you have any questions or comments, hey, if you want me to buy you a cup of coffee just to get things kick-started, I totally would be happy to. You know where to find me, Kristen here in Phoenix.com. That's where. Go out there and make it a beautiful day.